Good evening, everyone, and thank you for joining us for our virtual session, Home Equity Loan Line versus Mortgage Refinancing. My name is Barbara Agan, and I'm the Director of Member Engagement and Education with ABCO Federal Credit Union. Our presenters today are Patrick Wade, an account executive with Member First Mortgage, and Esther Hubler, Vice President of Lending with ABCO. I will now turn the meeting over to Patrick.
Awesome. Thanks, Barbara. Thanks, everyone, for coming tonight. We got some interesting topics here. A little bit about my background. I graduated from Georgetown University in 2001 with a degree in economics. And ever since graduation, I've been in the mortgage business. So 20 years at this point in mortgages. Worked for mortgage banks, mortgage brokers, credit unions, and credit union service organizations, which are set up to allow credit unions to offer more products with lower rates and fees for their membership. One of the things that I enjoy most about my job, aside from meeting great credit union employees and working with members, is I love talking about mortgage financing. I find it absolutely fascinating. Esther, could you introduce yourself, and then we can get started?
Absolutely. Good evening. I'm Esther Hubler. I apologize if you can hear I'm in my office and the cleaning lady's here and vacuuming, of course, right at this moment. My door's closed. I'm sorry if you can hear that background, but I've been with ABCO for give or take about 25 years in lending. I started with credit unions right out of college. I've worked at a number of them in my career, all in lending. So right now I do head up the consumer loan department here, and that would cover some of our topics tonight around the home equity closed-end and open-end lines.
Awesome. Great. So we'll get started here. If you have questions along the way, absolutely use the toolbar to ask those questions. If the questions are more personal in nature, my information, Esther's information will be available at the end of the presentation, and you can certainly set up time to speak with either of us at the end or sometime later this week. I can do a screen share with you and go over some of the things we've covered or answer some more personal questions. One of the things that I get to see is I get to see thousands of mortgage applications each and every month from about 300 credit unions nationwide. In my role, I work directly with about 40 credit unions in the New Jersey area, and we see a little over 1,000 applications every month. With the information that I get to see, most people refinance for one of three reasons. It could be shorter term, it could be to get some cash out, it could be to reduce their monthly mortgage payment. Sometimes people are able to take a refinance, take a new loan, and they're able to accomplish more than one of those things. I call it the trifecta. They're able to accomplish three of those things. And what they're really doing is they're taking their first mortgage loan and they're able to use it and position it as a financial tool. Similar to a home equity loan, where you can also use that loan as a financial tool, whether it be to have a line of credit open, set aside for some unexpected expenses. Air conditioning could go on your car, your house. Maybe you need some new windows, or maybe you're going to use that home equity line of credit as an additional financial tool to pay down higher interest rate debt, maybe on credit cards. Maybe you want to extinguish some consumer loans, or for a variety of reasons. So we are going to go over some of the differences tonight between refinance loans and home equity loans. But that would really be the number one similarity, I would say, between the two products, is they are each a financial tool that will allow you to position yourself either for improved cash flow or empower yourself to know that there are going to be situations in your life, which we all know at this point in home ownership, there are going to be situations in your life where your mortgage loan is going to either allow you to have better cash flow or accomplish your financial goals. So we're going to talk about each of these loans individually, but the main concept that we're gonna hammer home tonight is both products are really a tool to be able to position yourself and put yourself in a better financial position. Esther, in your experience with home equity lines of credit, typically what's the number one or two reasons you see for members to take that product?
I think college tuition is a big one. Home improvements are also another popular reason for home equity lines. Some people just like to have cash available. And like you said, they use it as a financial strategy more than an actual quote unquote loan. So they like to position themselves so that they can access the funds that are really sitting in their home.
Exactly, and one of the things that I like to recommend to my loan officers is to make the member aware that they can use these tools in coordination with each other. Mm-hmm. So often what will happen is a member will come in to look for a refinance simply because the market right now is allowing for much lower interest rates than were available traditionally in the past. And we want the member to think long term, not only about their refinance product, but about their life in general and what things that may come up in the future. So often it is a good idea to do both a refinance and open a home equity line of credit for those reasons that Esther mentioned, for those things that will come up in the future, for those unexpected expenses. So it's often easier for you, the member, to accomplish both of those things roughly around the same time period. And what's interesting is you will feel empowered when you do that. Because if you quietly think to yourself right now, what would my next action be if both my car transmission went tomorrow, my home heater went tomorrow? Do I have the ability? Do I have the cash flow? Do I have the capital sitting around in order to pay for those expenses? And if so, would that make me feel better or worse about my financial position? Based on all of the applications that I get to see, certainly in working with credit unions for the last 10 years, most people don't readily have cash sitting aside for multiple life events at the same time. And so when you do a refinance and put yourself in a better cash flow position or take some cash out and couple that with a home equity line of credit, I assure you, you are going to feel tremendously better about the power you have over your life, because you're going to know that you've set yourself up in the event that you have those unexpected expenses to be able to handle those without having to be reactive, right? Because the reality is when you refinance and when you elect to open a line of credit, you're being proactive and you're going to feel a lot better about yourself. So let's talk about a couple of the concepts here. And Esther, I will obviously call on you with home equity, but when you're going to contribute to some of your real world experiences, I would greatly appreciate you to do that. So let's talk about the refinancing process. Refinancing, you're typically paying off an existing first mortgage. It's usually the mortgage that you use to buy your house. And what you're doing when you refinance is you're going to both pay off that existing first mortgage. You're likely going to set up an escrow account, which is that account that pays your taxes and insurance. And you're likely going to have some closing costs all wrapped into one. And when you work with your loan officer, you're going to work with that person to decide, really what's the motivation of the refinance. It's funny to me, if you simply ask somebody, in your office, in your house, walking down the street, why would you refinance? Esther, correct me if I'm wrong here. Most people say, well, I want a lower interest rate.
Correct.
Right? But the reality is, lower interest rate is really a precursor to either accomplishing better cash flow, potentially reducing term, or getting some cash out. I mean, those are really the three reasons that you're going to refinance. The lower interest rate, though it's nice, it doesn't necessarily accomplish those three goals. So when you work with your loan officer or your lender at the credit union, they're going to ask you some questions so that they can best help you decide on, the actual motivation for the refinance. Yes, it's nice to have a lower interest rate, absolutely. But the end goal is likely to have better cash flow, meaning reduced payment, either some cash back, cash back in the form of taking a cash out, or reducing your term. And again, in today's world, very often able to accomplish that. The typical process for a refinance takes anywhere from 30 to 45 days. In today's marketplace, there are some challenges with timelines, with getting appraisals done and things like that. Typically, there's an interior-exterior appraisal, and that is what takes the longest or contributes to the longest time period in the process of getting an appraiser to come out, doing an interior-exterior, getting some title work done, and typically you're going to sign a very similar loan package as to what you signed to buy your house. The home equity process is a little different. Typically, there's not an interior-exterior appraisal. Usually, they're using an automated value. Esther, how does APCO handle evaluating the property?
That's correct. We use an AVM.
Use an AVM, which is where the credit union is going to take the information that you've provided them about your property, and they're going to check with readily available public information that they can establish a value. So similar in the refinance process of getting an appraisal done, the credit union will use an AVM to establish the value of the property. Same idea with a home equity line of credit. You're going to open up a new loan. It's in second position compared to the refinance, which is in first position. Usually the home equity line of credit is available over an extended period of time. Esther, on your home equity line of credit, is there any time period of which the member has to open the line and use it?
No, we don't do that. It's a 5-year draw period, 15-year repayment, but you have up to 5 years to draw on it.
Perfect. So it is a tool that you can use over a 5-year period for any number of reasons to use the equity in your house to cover either expenses or repairs or things like that. The refinance loan is a first mortgage comparatively, and does have a draw period of payback period, of up to 30 years, typically in 5-year increments. So it could be 10, 15, 20, 25, or 30 years compared to the payback period of a home equity line of credit up to 15 years. Overall, Esther, what are the typical costs on a home equity line of credit?
Actually, APCO does not charge any costs, no charge to the member. I mean, we do incur some fees to do it, but we do not pass those fees on to our members.
That's fantastic. That's fantastic. So often what you'll see with a first mortgage with APCO, you'll see someone refinance their first mortgage and then subsequently open up a home equity line of credit in the event that they wanted to use that at some point in the future. Some of the reasons for a refinance we talked about. A rate and term refinance is simply to take your existing first mortgage loan and you're going to redo the loan, typically without getting any cash back, but reducing the term of the loan. Before we actually complete that transaction, we will review with the member that overall strategy, because there will be some instances, and there's likely some members on the call tonight, there will be some instances where it may make more sense for the member to keep their existing loan and simply pay their loan down faster by making principal only payments. We do that review with the member to see if that's something that benefits the member better, because there are some costs associated with the refinance. We want to make sure that we're not unnecessarily having the member, you spend money if you don't need to. So if the only true goal of the refinance is a rate and term, we're going to look at that existing loan balance and see if we can accomplish the same thing for you without unnecessarily having you spend money. The second most popular reason, aside from term reduction for a refinance, is getting cash out. And that's where you're taking your existing loan balance and you're adding some additional cash to that balance to have cash for, either, an existing expense, or to have cash set aside for an anticipated future expense, or to perhaps take that cash and invest it in something where you're getting a higher interest rate. I've definitely worked with members in the past where they had some financial plans where they were able to, borrow money at a lower interest rate, reinvest that money, and obtain a higher rate of return, and effectively make the difference in between what they were paying for the money and what they were earning on the money in their investment. And the difference between that, the cost of the money and the money they were earning is the spread. And so they were able to better position themselves financially to do that. The third reason people will refinance is simply to reduce improve their cash flow, or reduce their monthly mortgage payment. Now, there's a couple of ways to accomplish that, right? So we could simply reduce your interest rate, and on the existing loan balance, that will obviously reduce the amount that you owe each month. Another way to accomplish that and improve your cash flow is to extend your term. There are often situations in members' lives where it makes sense to actually extend their loan, because by extending their loan, they're increasing the number of payments they have to make, but they're also reducing that actual payment that has to be made. I have had instances with that over the years where members elect to do that. And so in the process of talking about and thinking about a refinance, we go into granular detail with the member to really hone in on what the motivation is for the refinance, so that we're able to not only meet those goals, but also ask questions to make the member think about future goals. So we take this very seriously, and in the process, we need you to be as upfront with the team as possible, so that we can best help you. And I know Esther's team does that as well with the home equity loans. Refinancing closing costs typically range between 2 to 3% of your loan amount, but that is obviously included in the loan amount. People usually do not pay that outside of the loan. That's usually wrapped into the loan. When you start to think about refinancing, you also want to consider how long you're going to stay in the property. I can speak to this from pretty recent personal experience. Prior to the pandemic and everything that it brought, my wife and I lived in Fort Washington, Pennsylvania. We had just refinanced into a 15-year fixed loan with the intention of paying the loan off in 10 years. I had my amortization schedule set up and started to pay my loan down with my amortization schedule, so that I could pay my loan off in a 10-year period on a 15-year fixed rate. We did not know that we would be selling our house and moving for some life changes within a 8-month period of refinancing and then moving. So had I had that knowledge, right, if we all had 2020 or could play Monday morning quarterback, in that instance, had I known I was moving within a 6-7 month period, I would have elected not to refinance, because yes, I did pay 2 to 3% of my loan amount, but at the time we made that decision with the best information we had. But I would ask you to consider, what's the long-term plan? Are you planning on staying in the house, less than a year? We would likely advise you not to refinance. Are you planning on staying in the house, more than a year, 2 to 3 years? It would very likely then make sense for you to refinance and potentially change term and get some cash out. So those are the types of questions you really want to think about when you start to consider whether or not it makes sense for you to think about refinancing. Quick question here in the chat room here. You recently financed, would the appraisal obtained be used for the value of the home equity line of credit? Esther, is there an instance where the credit union would ever elect to use an appraisal from the first mortgage, or would you typically use the AVM?
I mean, we're typically going to use the AVM. If there's a huge disparity between the value of the AVM and what may have been used to do the first mortgage, and we're within a reasonable time frame, like no more than 90 days, then we could potentially consider taking that appraisal. But that's done on a case-by-case basis and only if necessary.
And good. And that's a good question to ask. And it brings up a really strong point about how beneficial it is to work with ABCO Federal Credit Union. I can tell you that I work with about 300 credit unions nationwide. ABCO Federal Credit Union stands out to me in the positive for so many reasons. But one of the reasons it really stands out to me, and you know, I would love to be a member of ABCO if I was looking for a home equity or a first mortgage or really any product, is that ABCO looks at the individual member and makes decisions on a case-by-case basis. Let's think about why that's important. If you're not a member of a credit union, you're simply a member of a bank, or you're just going to a lender, I can tell you right now, and this is from experience because I've worked for mortgage banks, I've worked for mortgage brokers, those lenders will look at a canned set of guidelines written by a government entity. So those lenders will look at the guidelines of Fannie Mae and Freddie Mac. You may have heard of them. They're the biggest investors, and one and two biggest investors in the first mortgage world in the entire country. And they put out a set of guidelines. If you are a borrower and don't fit that set of guidelines, you'll get a denial letter. That's it. You're not getting the loan. At a credit union, and specifically at ABCO, they go 10 steps further and they look at you, the individual member, and make their lending decisions based on you, the member. That is a huge advantage. I mean, that is a monumental advantage if you're looking for a first mortgage or a home equity line of credit, because that allows ABCO to underwrite the loan to you, the member. It's not just a sheet of paper that says, well, we should make this loan or we shouldn't make this loan. They actually look at you. That allows them to deliver unique products for you and makes your life a lot easier. A good question, got off on a tangent there, but that is a really great reason to use the credit union for all your lending products, whether it be car loans, student loans, things like that, but certainly first mortgages and home equity lines of credit. So the three reasons we talked about for traditional refinances are to reduce your term, to improve your cash flow, or to get some cash out. And again, you can likely achieve that trifecta given today's interest rates and today's offerings. Home equity loans, I would always advise, if you have the ability to open a home equity line of credit, even if you don't need it today, you should very strongly consider opening that home equity line of credit when you refinance. The reason being is how many times, think back in your life, how many times did you plan for an unexpected life event? Think about that. Think about what I just said. How many times did you plan for an unexpected life event, right? Unexpected life events aren't planned for. They just happen. We know that. And just think back to the last year. So you want to be proactive about your financial life as opposed to reactive. Reactive would be, okay, I refinanced, I went to this seminar. Yeah, they told me about all the great options I had, and that I should open a home equity line of credit and have that available for when something comes up. That's all good and well, but I don't do it, and then something comes up. Car engine goes, kids break something in the house, broken window, air conditioner goes, all happens at once. And you don't have the cash to do it at that time. Now what do you have to do? What would have to happen, Esther? What would the person do if they didn't have that home equity line of credit and they didn't have the cash?
There's a couple of things. They either have to apply for a loan at that time when life is a little chaotic and stressful, or advance on credit cards, which may not be the best option depending on where you are with your credit cards. So
right. Because the exact time when your world is falling apart, your car doesn't work, your air conditioning doesn't work, you want to get in line for a loan.
Right, exactly.
Right? That's the exact time, right? So we want to avoid that, right? That would be the reactive financial planner. So this is a proactive approach to your financial life. And just think about those two options. Take a pen, take a piece of paper right now and say, okay, I want to handle this after everything's happened. When I'm at my max stress level, put that on the left-hand column, and then draw a line, put on the right-hand column. I don't have to worry about this stuff because I have a home equity line of credit open. And if that stuff happens, all I have to do is draw my home equity line of credit. Which one makes you feel better? Which column do you want to be in, Esther?
I want to be in the cool, calm, and collected column.
Yeah, I want to be in the right-hand column where if something happens, I go, I got this.
Yeah.
I'm good. And that's really what a home equity line of credit does for you. So it gives you that peace of mind to be able to say, if something bad goes wrong, I can handle it. It gives you that break. It's like a timeout. This way you don't have to get in line and apply for a loan. You already have it ready to go. And as Esther said, what's the cost of a home equity line of credit?
Time.
It's free, right? There are no costs for the home equity line of credit. So that's definitely something that you should consider, and I would very much recommend, when we conclude tonight, that you sit down and draw on a piece of paper things that could likely go wrong. Do you have the ability to pay for those things tonight? If you don't, maybe you should apply for a home equity line of credit tomorrow or consider refinancing so that you're proactive about your financial life. Now I'm going to go back on the slide here quickly just to get on refinances. I'm going to touch on this briefly. Again, we can help you with more specific information. I want to provide some general information on the qualifications for a refinance, and then in turn, I would like you to do that for home equity line of credit. So general information for refinance, you typically need a mid-credit score of 620. And if you don't have that today, I still encourage you to apply because, again, APCO has the ability to design loans around you. Typically, we're going to need a 2-year history on where you lived, where you worked, and how much you made. In the mortgage industry, I call it the rule of 2. We're obsessed with, the last 2 years of your life. You want to see 2 pay stubs, two W-2s, maybe 2 tax returns, 2 forms of identification in the last 2 months of your asset statements. We like the number 2. And that's typically all the information that you're going to need to start the refinance process so that you can capitalize on either one of those 3 reasons or all 3. Now, Esther, if you could, briefly tell us about the information that you would need to apply for a home equity line of credit, please.
So you first have to have a membership account here that's in good standing. You can submit your application really over the phone or in person. We take them that way and we start to process them within a 24-hour time period. We are also going to look for a year-to-date pay stub. We will ask for 2 years W-2s. We pull your credit. We are looking for our better rates, and highest loan amounts. We're looking for a 640 credit score. That doesn't mean that you can't get a loan if you have a lower score, but we're going to start looking at a different loan to value ratio at that point. We do want you to be on your job at least 12 months. More often, we would like to see longer, but that's a minimum.
Good. A lot of the documentation you mentioned, Esther, we collect when we work with members through the first mortgage process. So as we alluded to earlier, it's definitely something that you should consider because you're already supplying that information for one of those 3 reasons.
Right.
And the reasoning behind the home equity line of credit would be to provide yourself with that proactive approach to your financial, your financial life, your financial plan. And if you're like me, if I have the information out, I'm far more likely to follow through on what I'm doing, as opposed to if I put all that information away, I then have to get it back out and reapply. I'm sure you've seen that, Esther.
Absolutely.
Yeah. So it's make life easy on yourself. If if it's something where when you make that list and say, okay, do I have the ability to handle these potential unexpected life events today? And that list is far, gives you some anxiety, and you make that list on the right-hand side, will I have peace of mind if I have a home equity line of credit? Follow through. Move forward with that home equity line of credit. It can't hurt you. Esther, can you think of a reason or give an example where someone opened a home equity line of credit, didn't use it, and it hurt them?
No, it probably helped their credit score actually with all that availability and not using it.
Yeah, I cannot.
No, there's really no downside.
There's no cost. The time frame is very quick. If you don't use it, it doesn't hurt you, and if you have it, it provides you with peace of mind. That sounds like a good deal.
Yeah, it's a great deal.
It's a fantastic deal. So I would strongly ask you to consider, if you're going through the refinance process or thinking about it, to also consider moving forward with a home equity line of credit. And if you find when you look into a refinance that that's not something that you feel is going to benefit you today, I would still tell you to consider opening a home equity line of credit, because again, put a price on peace of mind. I mean, how do you do that?
And Patrick, not to interrupt you, but we could do simultaneous closings, which make it even easier so that they can close the refinance and the home equity at the same time.
Perfect. I like that idea, all in one shot. We're going to go over a quick example of a refinance sample here, but I want you to understand something. So when you're in the mortgage business, people are always asking you, should I refinance? And they'll say, well, my neighbor told me if rates are down by 1 percentage point, that's not good, but if it's down by more than 1 percentage point, that's good. I can tell you right now, I've been doing this for 20 years. There's no logic to that. There's absolutely no logic to that. Given the fact that there's multiple reasons to refinance, and given the fact that your loan officer, your team are going to effectively do a financial evaluation with you, you should, if you even have the inclination that you want to, improve your financial life, you should consider refinancing and start the application process. It doesn't mean that you have to follow through, but what it does mean is you're going to be empowered with information. You're going to be empowered with information. Again, one of those three things might be a benefit to you. Fourth reason could be to extend your term, right? That's that other way we talked about. You can improve your cash flow. I can definitely think of instances, with family members in my life where, my grandfather, he's 93 years old. His house is paid off, but there was a time where, he did have a small mortgage, and it made sense for him to extend his loan. The alternative was for him to take a different type of mortgage product, and he wasn't. I don't think that was going to be as beneficial to him. So you want to be able to empower yourself with information, and you will definitely get that with the credit union, and certainly with the mortgage department and the home equity department. They're going to give you an evaluation so that you have that information to be able to make that decision, for yourself. And the reality is the interest rate, yeah, it's nice to get a lower interest rate, and you very likely will get a lower interest rate than you had previously. But the interest rate doesn't necessarily dictate the actual end goal, right? Those end goals are either going to be, improved cash flow, improved term, or getting some cash out. So that's what I would ask you to consider. I do like the example here because there are people today coming in, applying with interest rates of 5% and moving to even lower than 3.5%. But we want to really get granular and talk about, with the member, we want to get granular and talk about what's the real motivation here. How do we accomplish that motivation? How do we provide them with the most peace of mind, so we put you in a better financial position? So that always make application if you have any inclination, because you will leave empowered with information. Some of the considerations we've talked about. One of the things that often comes up, and Esther, I'll ask you to comment as well. Whenever I do first-time home buyer seminars, there are some people that come in and are there to hear about the refinancing process. But one of the things that typically comes up throughout the presentation is that the member is usually very concerned about their credit score. And though credit, and would you say that's true, Esther, when you work with
Oh, yeah,
members?
absolutely.
Yeah, and here's my answer to that. There are minimum credit scores that the lender wants to see. But I would also advise you that don't let that impair you from applying. And the reason being is if the score isn't where it needs to be at that present time, the first mortgage team, and I'm certain Esther does this as well, they will give you information, so that real world information, so that you can improve that credit score or make the necessary changes so that you can move forward in the future and act on your financial goal of either refinancing for rate and term cash out or improved cash flow, or having that home equity line of credit. And you will get that at the credit union. You'll get that at the credit union mortgage department. Other lenders, they don't do that. If you don't qualify, what do you think happens, Esther?
You get a denial.
You get a denial letter. They will send you a denial letter, and that's it. End of story. But the reality is, we're a credit union. We're better than that. We're in for the long haul. You're the member. You're the owner. We want you. It's in our interest for you to be the most financially successful you can be. So, when that comes up in those seminars, my answer is always apply, because you're going to get that real world information as to how to improve that if it's a challenge. Now, let me insert the caveat here. If we give you the advice, what do you have to do, Esther?
You have to take it. You have to
actually act on it.
Work on it.
You have to act on it. I mean, it's like a weight set. My father, I love him. We got him a weight set. He looks absolutely no different. Why not?
He's not using them.
He's not using them. Just because you're in the weights doesn't mean you're going to get, muscles. Same thing with financial advice. We want you to be successful. We'll talk a lot about budgets and plans and things like that. But, talk is talk. You need action. So we will give you that plan so that you have the ability, to move forward and achieve those goals and provide yourself with that peace of mind. So, we're in it to help you, but it's one of those things where you need an active participation in order to get the results. That's true of exercise, and that is certainly true of financial advice. One of the things that as always, I'm 42 years old. One of the things that has stuck with me, my entire life was said to me by a dentist. I went back and got braces for the second time about 10, 15 years ago, and I was hesitant to do it. And the reason I was hesitant to do it was because I was embarrassed that at an older age that I was gonna have braces. He said to me, because I was hesitating, he goes, "You know what the hardest decision in life to make is?" Do you know what that is, Esther?
Just do it.
The hardest decision in life is the decision to decide.
Oh.
You have to commit. So both with a refinance and a home equity line of credit, when you commit to your financial goals, you're going to empower yourself. But if you come to the presentation and you say, "Man, that's pretty good information," what's on TV, and you don't do anything, you're not moving forward to that goal. So we gave you a lot of information tonight, and I hope that you learned some things. And I would strongly encourage you to sit down with a sheet of paper and certainly write things on the left-hand side that if those things came up, those unintended expenses came up, ask yourself that question: how would I handle that? What would I do? Or ask yourself some other questions. Could I use an extra $150 in cash flow a month? Esther, if I gave you a loan and improved your cash flow by $400 or $500 a month, would you do that?
Yes.
What would you do with the money?
Probably pay my kids' tuition.
Right. So, there's a couple of things.
A whole lot of things I would do with it.
There's any number of things you could do with that. Personally, I can tell you right now, the amount of shoes that I would buy would definitely go up. I would definitely buy more shoes. But I would also take a portion of that money and pay down, any higher interest rate debt that I had, or maybe I would take that savings and apply it to my unpaid principal balance of my loan so I could pay my loan off faster. It would allow me, what would allow me? Choice. It would allow me choice. And typically, anytime I have a choice, it makes my life better. And that's what, considering refinancing and then acting on it will likely do for you. Same thing with a home equity line of credit. It allows you choice, right? Because it takes away that fear that if something goes wrong, I then have to go and live on the left-hand side of that paper in the unexpected expense column and then try and figure it out in a reactive manner, as opposed to setting up my tent on the right-hand side of the column where I have the home equity line of credit, and when something goes wrong, have an immediate answer to solve it. And we have a couple of comments here. If you want to obtain an auto loan but separate from the HELOC, would the HELOC hurt your credit score or hurt your ability to borrow additional funds?
The HELOC itself should not hurt your credit score, just having it. Obviously, if repayment is a problem on it, that could impact your score. If you become maxed out on it, that could impact your score a little bit. And it doesn't in and of itself hurt your ability to borrow additional funds, but you have to be able to qualify to carry the home equity line and the car loan. So we always have to consider everything that you have outstanding.
And that brings one of the points you made there. I want to highlight that typically what is going to negatively impact your credit score is not your ability to pay, it's your willingness to pay on time. That's the number one factor that's going to impact your credit score negatively. I mean, the algorithms are set up, and that's the formulas that the credit bureaus use to generate a credit score for each individual borrower. They're set up to take a variety of factors into account. I'm not going to explicitly tell you what those formulas are, but in my experience in seeing tens of thousands of credit reports, typically when you have more available credit, it usually increases your credit score. On the same front, when your credit availability goes down, when you're maxed out, usually that will negatively impact your credit score. So in an instance where you simply have a home equity line of credit open and available, that would very likely raise your credit score. Mm-hmm. Good point to highlight. Good.
And then awesome. As far as Julie's inquiry, I think that Barbara will probably provide our contact information.
Yeah, I did. I responded directly to Julie.
Perfect. Okay, great.
Good. We gave you a lot of information in a pretty short period of time tonight. I certainly hope the information was beneficial. One of the things I would ask you to do is certainly create that list. It may create some anxiety. Finances are not the most most fun thing to talk about, but they're even less fun if you have to confront tough financial decisions when you're in a stressful situation. So be proactive about your financial life. Sit down tonight, take 5 minutes, and write down some things where you would expect to have financial issue if they went wrong or broke or simply were removed. And just simply ask yourself a question: how would I pay for those things? What would I do? Would I have to phone a friend? I mean, you don't want to get in that situation where you have to phone a friend. And then think about, what are the ways you could solve that? Would it be with, cash out of your existing property? That's a refinance. Do you want to get involved in a 30, 45, 60-day process, when there's an unexpected life event? Probably not. So you want to be proactive about that. Think about refinancing, sooner rather than later. And certainly you would absolutely consider either, be proactive about a home equity line of credit to have that open to provide yourself with, similar peace of mind. Take 5 minutes, do that. You're going to feel uncomfortable, but usually you don't accomplish anything worthwhile if you don't challenge yourself. So I would certainly ask you to do that and sit down for 5 minutes and write that on that piece of paper. the question here, what's the interest rate for the HELOC once it goes into repayment?
So our interest rates are always based on prime. Depending on where your credit score falls, you may have a margin added to prime, say prime plus a quarter, prime plus a half, but it will always adjust. Your interest rate will always adjust with the prime rate. So whatever's
Okay, and if you see, oh,
yeah, no, whatever the prime rate is at that time is what's going to determine your interest rate on those outstanding funds.
yeah, Patrick, if you want to scroll up, there was a question before that.
Okay.
Okay, Rebecca, is that the one?
Yes.
No mortgage, just want to do a HELOC, the whole assessment process. So we would not do, we don't use the tax assessed value, but we do an automated valuation. So that is not a full appraisal. It's something that we get very quickly online. It's really a pretty streamlined and quick process to get a home equity line of credit. We will need some information from you in terms of income verification, but it's pretty straightforward and quick.
So there was a question. Thank you, Esther. There was a question here. Does it make sense to refinance if the interest, I'm paraphrasing this, the interest rate reduction is a point difference? So Rona, I would tell you if the rate is a point higher, I would definitely inquire about multiple options. The reason being is that I can think of about 5 options right now off the top of my head. So for example, the first thing that one of the loan officers will do is they're going to simply look at your existing term and they're going to see if it makes sense with all of the closing costs that would be involved for you simply to keep your existing loan and pay more toward principal only. Or the comparison would be, does it make sense to take your existing loan, refinance it to a shorter term with a lower interest rate? So there's 2 options immediately off the top of my head that I would want to make a comparison, for you. So again, I'll never provide just information based on interest rate because I want to be able to look at the overall financial picture and the financial plan. So that's
Well, I can share a personal experience. So just recently, the beginning of the year, I refinanced only because I started getting, all those offers in the mail, and I said, all right, well, let me just see what it would do. So my mortgage, because I wasn't doing any cash back, and I actually had refinanced with the cash out refinance 2 years ago. So I wasn't doing anything but lowering my rate. So what that did for me, because it extended my loan by a couple of years, which is fine because I still have enough equity in my house that's not going to matter. So it lowered my mortgage payment $200, and I had 45 days. So that gave me an extra mortgage payment, to bank. So for me, that was worth it. The only person that came to my house was the appraiser for me to sign papers. Everything was done online and it was very easy, as opposed to 2 years ago. And in that situation, I had a home equity line of credit. I had a situation where I not only had to take care of my car payment, but I ended up having to assume another person's car payment. And they were both around $400 a month, which I absolutely could not afford. So I used my home equity to pay off 2 car loans. And then over the course of time, I felt like my cash flow, like my backup cash, was dwindling, and it really did scare me. So I worked on my credit score. I made sure it was at the best, and I did a cash out refinance and was able to pay off the home equity and get a nice change, bunch of change to put in the bank. So there are different situations where, it does work.
How great did it feel that you had that tool readily available to you?
That was awesome. Yeah, no, that was that was good. It was like almost like, yay, like this is really, it's working and it feels good, and I still have that money there. It's not like I took the money and went and bought sneakers or, something like that, went on spa visits, but but it was good. I like having that emergency funds.
Exactly. And that's that peace of mind that you need, because when that unexpected event comes up, you're typically not thinking the clearest, right? So you're not trying to get in line to get a loan. You'd rather be able to say, well, we step back here. I know how to handle this in the interim because I have this tool. And then when the smoke has cleared and I'm not thinking emotionally, I can make decisions financially, right? You don't want to make emotional financial decisions ever. And so a home equity line of credit is that tool. It is that gap to be able to provide you with that time between the, oh, I have to act now. And now after I've acted with my tool, I can now make a financial decision without thinking emotionally. It's a great tool for that.
Mm-hmm.
Absolutely.
Awesome. Well, our contact information is available there. You can, that's my cell phone. Feel free to text me if you have, personal information that you want to review in your refinance that you don't want to, put in a group chat. You can absolutely, text me or shoot me an email. I'll do a screen share with you and help you the best I can. And then Esther's contact information is there if you have, further questions on the home equity line of credit. I want to thank Barbara for setting this up tonight. I really enjoyed doing these. I find that they're very useful, not only to me, but I also love it when the applications come in. We're able to help everyone with their first mortgage product. And Esther, thank you. I learned a lot tonight, and maybe contacting you to open up an extra line of credit as well.
Awesome.
Yes. Thank you to you, Patrick and Esther. Thank you to all the participants who attended this meeting. So some of you did join late, so you may not have heard that this meeting is being recorded. So this will go out probably on Friday, along with a copy of the presentation, and then you'll probably already have my contact information, but if not, you'll have it there. And again, feel free to reach out for anything, lending or otherwise assistance. We're here to help.
Awesome.